The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the November 20th, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can change the gift. We can recognize the gift in every situation that gets tossed at us. Now, today you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 8 o'clock in the morning. So if you are listening live, thanks so much for doing that. When I say live, I mean your normal recorded program time out there, so it's really recorded. But if you are listening live, we would love to hear from you at 877-927-6648. Now, you can give us a call at that number. If you can't call in, but you're still listening between 8 and 9, go ahead and send me an email. Send that off to Steve at TFNN.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. So now we're going to start off, take a look at all the U.S. equity futures out here. They are mixed bag. You've got the Dow that is off 22 points. The S&P is down 1. The NASDAQ 100 is up 3. And the semis are down 2. That is a flat market out there. But over in Asia last night, it was a mixed bag as well. You had the Shanghai up 14 points, about 0.5%, nearly 2% for the Hang Seng. That was up 323 points, about 0.5% to the downside for the Nikkei, 197 there. Currently, you've got the DAX in Germany off 57 points, the FTSE down 27. Now, we know that directionally speaking, the NASDAQ and the DAX are pretty well tied together. So it's worthwhile to pay attention to the DAX. In fact, this morning we're going to start off, because it is so early, and many people may have forgot. I just really mentioned, I think, at the close of Friday's show that I needed to record today's show between 8 and 9. And we're going to start off taking a look at the international markets out there. So we're going to do that. We'll take a look at metals. They're trading lower. Gold's off $10. Silver's down 42 cents. You do have the U.S. dollar index. It's also trading lower out there. Something to think about. Let's go start with taking a look at. Let's start in Europe, where it's trading right now. We don't have to go to a closed market. Well, we do want to take a look at the Nikkei and the Shanghai out there just to get an overall view of what's going on. But let's begin by taking a look at what's going on inside the markets for the DAX and the FTSE. So we'll take a look at Germany. We'll take a look at the UK. And here we're taking a look at some longer-term charts. We've got daily as the shortest period of time that we're looking at on these charts here. So it's interesting here. We take a look at the DAX just to give you a feel for where we're at. If we open up this chart, the DAX is nearly at all-time highs. So it's all-time high. That took place out here. Let me get a couple years ago. Let me get my cursor. Sorry. Cursor helps. And so that all-time high is out here from 2021. That level, it's already been tested, rejected this year so far. That level's at 16,290. If the DAX were to close above that level at the end of December, that would certainly be a bullish outcome out there. This does have a Rhodes Momentum Indicator top, and that was confirmed with this dark cloud cover that formed in 2022. So again, we're agnostic to the time frame. We're just taking a look at the signals, but we are near all-time highs inside of the DAX as we speak right now. We're at 15,860. That all-time high coming in at the 16,290 level. Now that's the yearly chart. If we take a look at the monthly time frame chart, it has a TD9 count top. And right now we see on a monthly basis, prices back above that green oscillator and change line. If in fact it closes at the above 15,718, that's the number that's printing right now at month's end, that would be a bullish signal. And that would suggest it wants to make a run for that all-time, or for the January 23rd TD9 count top. And that level up there is at the 16,528 area. If we take a look at the weekly time frame chart, for the DAX. What we have here is we have a Gartley buy pattern that was formed a couple of weeks ago, just like they were on a weekly basis inside the NDX, inside the S&P, inside the Dow. What we've got here is a Gartley buy pattern with price above that green oscillator and change line. A green oscillator and change line tells you and I that we have a price oscillator, and with price above that, we have a rising price oscillator above zero. Those are bullish conditions. So we take a look at the daily time frame. The daily time frame has an A. It's really got two different A to B equals CD patterns. Either way, whichever one we would use, this needs a bearish reversal candle. So we'd be on the lookout for that. If it generated a bearish reversal candle on a daily time frame, that would signal that we should see a pullback, and that pullback to the 15,465. So short of that, by the way, on Friday, price negated an already sell the D point pattern. Did that after one session when price closed above both a bearish shooting star, and it was also a gap to the upside. So when you have a mix of that, in this case here, which we did, you're not sure which of those two signals. Well, we found out on Friday that sell the D point signal was a false reading out there. So we're watching for that. Short of that, price should continue to move higher, and that's really the message of the weekly and the monthly chart as we take a look at them right now. If we open up the FTSE, this FTSE is done exactly as the DAX has done. It has tested and so far rejected its all-time high. Was also a Rhodes Momentum Indicator top out there. That occurred a few years back. That was in the 2018 time frame. So that high out there is up at this resistance at 79.0350. It's been tested and rejected. But right now in the yearly chart, things are not looking bearish or anything along those lines as we speak. If we look at the monthly time frame chart, shows what? Shows that price had pulled back at the earlier part of the month, in the middle of the month out there, found support at its breakout level. That breakout level being 67.87. Right now, price looks to me like it wants to go target that 76.14 area. Especially true with regard to the weekly chart, which is trading above its oscillator and change line. As long as price remains above that, a further move higher may unfold. Now, in the daily time frame, it says, I beg to differ with you. From its intraday, if you will, we're looking at yearly, monthly, weekly charts out here. So the daily time frame kind of becomes that short-term intraday-ish, if you will. And that's got to sell the D-point pattern. And the only way that gets negated is a close above the candle of a few days back, and that's up at the high of 75.3377. So if price were to close above that, that would negate that signal, said we're headed higher. Now, what did take place is we've got that sell the D point pattern, and then on Thursday and Friday of last week, price pulled back, tested and rejected that oscillator and change line. Now, because that is a red oscillator and change line, its signal is not neutral. We would call it neutral if it was green. It's not. But what we've got is kind of like this little sideways-ish consolidation just over the last couple of days out there. But overall, the FTSE, from a yearly standpoint, looks pretty darn good. Monthly is suggesting to you and I it wants to move higher out there. That's confirmed by the weekly as we speak right now. So that's what's going on over in Europe. Let's go take a look at what's going on over in Asia. And for Asia, we're going to take a look at two different markets. We'll take a look at the Nikkei for Japan. We will take a look at the Shanghai for China. The upper charts here are the Nikkei. Now, the Nikkei, this is the interesting thing. We didn't see this with regard to the DAX or the FTSE. When we take a look at the Nikkei out here, the Nikkei is trading above not just last year's high, the year before's high out there. In fact, the Nikkei is signaling to you and I that price finally wants to get back to test those highs from 1990. That's right, 1990. We're trading inside that swing point on a yearly basis as we speak. Steve Rhodes with TFNN. We'll be right back. We'll finish taking a look at the Nikkei, the Shanghai, and then we'll move on. We'll move on to some commodities. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We are recording this show between 8 and 9, so if you're listening in, we'd love to hear from you at 877-927-6648. We're taking a look at international markets. We don't really do that too often during the Trader's Edge show, but nice to start our day off, especially at 8 o'clock in the morning. We're looking at the charts here for both the Nikkei, that's in the upper row, and then the Shanghai down below. We were taking a look at the Nikkei chart out here. Pretty impressive how we are trading above last year's high, the year before's high. It's a very bullish market out here. And we take a look at the monthly time frame chart. What we don't have is any kind of a topping signal. We've got Rhodes momentum indicator signals that have been triggered. There's been no bullish or no bearish reversal candle to confirm that top. And if anything, this month prices pulled back, tested, and rejected that green oscillator and change line. Those are bullish conditions out there. On a weekly basis, what took place today in today's trading has triggered a Rhodes momentum indicator top. That needs a bearish reversal candle to confirm the pattern. But price is up at resistance out here. It was a TD9 count top that formed. From a monthly standpoint, let me grab my cursor out here. That formed the month of June. It's a weekly chart. I apologize. We're looking at the weekly chart now. So the week of June 16th has got that TD9 count top. If price would need to close above that, that is 33,772.76 to negate that signal out there. That's on the weekly time frame. And as we take a look at the daily time frame, no top or anything along those lines. If anything, there may be an A to B equals CD to the upside that is up there. Now the Shanghai, whereas the Nikkei is very bullish, the Shanghai, it's not trading below last year's open, not trading below last year's close. If we take a look at the monthly time frame chart, which also had a TD9 count top, price did pull back, tested and rejected that breakout level of 3010. So to the downside, be watching 3010. If price closes below that, that would say we are headed lower out there. On a weekly time frame chart, I don't have any kind of a signal out here, but price did close above today that oscillator and change line. That's going to matter on Friday, not so much how it closed on Monday in the daily time frame, just some sideways moves out there. So that's what's going on longer term with regard to some of the international markets. Now, I'm on a data feed here that allows me to take a look at some things that typically I don't do between the show at 11 to 12 out here. Let's go take a quick peek at what's going on in commodities. For that, I believe, I need to change screens out here, so just give me a moment. We'll take a look at what's going on in wheat, soybeans, not all the commodities, but some of the soft commodities out there. So if we take a look at wheat, Wheat has just been trading in a sideways range, and the key support for it is this breakout level. That's at 547.25. That was tested on Thursday, Friday, tested today. If price were to close below that, that would suggest we're headed lower. If we take a look at soybeans, we take a look at the January soybean contract. What price did was, and there's probably an A to B equals CD to the downside. That confirmed. We don't really need to take a look at that right now. What we need to know is up at the 1387 level, that's where resistance is at. That happens to be its TD9 count breakdown level and support, which is being tested this morning. Friday, we saw price close below support at 1348. Was that a false breakdown? It would be if, in fact, price closed above 1348.50 today. If it doesn't, then we're likely headed back to its recent lows. That would take us into the October 12th swing point. If we take a look at corn out here, corn just a sideways move. Nothing really special for us to take a look at other than price right now, just trading with inside its profile. Support at 467.08, resistance up at 479. If we take a look at the March contract, this is 2024 for coffee. We can see a Rhodes Momentum Indicator top with price consolidating with inside its profiles. The profile bottom or support level was tested on Friday, again tested this morning, and that level's at 166.18. If that were to fail, you can see coffee move all the way back towards 145. We don't have those conditions. If we take a look at sugar for March, it's got a Rhodes Momentum Indicator top. That's led to a sideways move. Its signal is neutral. It's neutral because price is above the top of its daily profile, 26.92. Finally, when we get to cocoa, cocoa's for Cocoa Puffs got a nice TD9 count top. Now, the TD9 count top would get negated with a close above 41.27. Price right now, this is a very neutral signal because price is trading above that green oscillator and change line, trading above the top of its profile, but you still have to respect that TD9 count top. So you want to watch that support level on any move lower. So that's what's going on with regard to those soft commodities. Let's finish this off by taking a look at the U.S. dollar index. So we pull up the U.S. dollar index charts, and of course the U.S. dollar index made up of 5 other currency pairs, the euro, which is 57% of the weighting. We take a look at the euro out here. That's the upper left-hand chart. In fact, I'll just simply expand it out. What you will see, or what you should see, is an A to B equals CD pattern to the upside, with price having achieved more than the 1-to-1 level out there. And so the next bearish reversal candle would form would identify a Gartley sell pattern, a sell the D point. Short of that, price wants to make a run for 1.1065. That's its breakdown level. We are traded above Friday's high. That is a bullish signal out there. So as long as the euro continues to move higher, and with it having a 58% weighting inside of the U.S. dollar index, if this moves higher, U.S. dollar index is likely to move lower. It's trading down 305 ticks as we speak right now. The Japanese yen is adding to that dollar weakness. Take a look at the Japanese yen out here. It's got a Rhodes Momentum Indicator top. It's got a wave number 7 top out here. And we've got price trading below not just yesterday's, Friday's low, I should say, but it's also trading below an area of support that formed out here on October 3rd and October 31st out there. And that's with a close below, and it looks like it will do that, 148.80 today. It negates that support level. Its next area of potential support out here would be from the low of October 5th. That's simply at 148.26. And those lows or that support area is just simply being established by those bullish reversal candles at those swing point areas. Below that, I don't have any other signal. So this is suggesting as this moves lower, it's strengthening. That means U.S. dollar index is weakening. Now, the pound itself is trying to move higher. It is trading above Friday's high out there, but it's finding resistance at its TD9 count breakdown area, 1.2506. If price can close above that, that says it heads higher, and that will also put weakness inside the U.S. dollar index. So we can look at just the U.S. dollar index chart, but it doesn't really give us the view that take a look at the currency pairs that make up the underlying instrument. And here we can see the euro, the yen, and the pound. Each of them are suggesting further strengthening and the U.S. dollar index weakening. And so we don't need to spend a lot of time with regard to the Canadian dollar, the Swedish krona, the Swiss franc out there. Not that they're not important. And we can take a look at the U.S. dollar index. That's the bottom right-hand panel chart out there. You'll see an A to B equals CD to the downside pattern. Much like the euro's got an A to B equals CD to the upside, the dollar has an A to B equals CD to the downside. So the euro needs a bearish reversal candle to confirm its top. In the case of the dollar index, it would need form a bullish reversal candle to confirm a bottom. Short of that, the U.S. dollar index wants to head lower. How much lower, Steve-O? Well, that A to B equals CD pattern, the 1-to-1 level, which is trading below right now, is at 103.66. I don't know where price is going to end at day's end, but if it continues to trade below 103.66, its next downside price target would be the 1.272 expansion level of that A to B equals CD pattern. And that would take us into 103.04. And below that, the next downside price target would be 102.25. That would be the 1.618 area. Again, so an A to B equals CD to the downside. That's the U.S. dollar index. The next bullish reversal candle would confirm a bottom. So the U.S. equity futures, they're still mixed out there. Actually, everything's just slightly red. We get back to this break. Let's take a look at gold and silver. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So we are recording the show between 8 and 9 this morning. It's 8:30 a.m., so if you're listening at the normal programming time, thanks so much for doing that. We'll make this the rest of the show as pertinent as we can for you for the day. And we're going to begin by taking a look at gold. We'll take a look at gold and silver. So we have the U.S. dollar index trading lower. We just covered what was going on with the U.S. dollar index. Looks like it wants to continue to move lower out there. Yet we're seeing both gold and silver sell off. You've got gold that is down about $11, nearly $12 right now, about 0.6%. So what's all that mean? Jelly bean. Now, I've got two different sets of profiles when we take a look at gold. So what I'm going to do here actually for the moment is I'm going to switch over and take a look at the other set of charts out there, just so that you have perspective. So give me a moment. We'll change screens. So we'll come back to this one. This way we can take a look at intraday time periods, other time periods. But what I want to show you, so sometimes Stevie will get different profile levels. The data is coming from the same source, the same database, but the calculation, there's something somehow different in the calculation. Now, most people would say, oh, man, that's pretty confusing. What I've learned, my experience is you use the data, both sets of data out there. That's a beautiful thing. So right now we're looking at that set of data that's coming from the E-Signal set of charts. And we'll take a look at Stevie's charts out here. E-Signal is what provides the black background charts. Ninja Trader charts are on the white background. Again, both are using the same data feed out here. So we can see with regard to gold, gold's got a TD9 count top and a TD9 count bottom. And prices right now, excuse me, cashew fragment. Price is consolidating with inside its profile levels. Resistance, we had a wide-ranging bar on Thursday of last week. Then we had kind of a doji-style candle. That's a signal that the market is getting tired, especially when you're up at resistance, and resistance there is 1989. So it's not a surprise that gold is pulling back. The surprise is that the U.S. dollar index is pulling back with conviction, is what it looks like. And you've also got gold doing the same. So what's this tell us? This tells us we've just got a consolidation with inside profiles, or at least with inside the TD9 count range out there. But right now, we're just simply going to call it the profile consolidation. That's between 1943.20 at support, 1989 as resistance. So let's go back to the white background charts. Let's here we've got multiple time frames that we can take a look at, additional signals and so forth. So we'll be at that screen here momentarily. If we take a look at the upper left, the monthly time frame chart out there, you got price running right up into resistance as well. So not only was it the top of its daily profile, it was also it's also its oscillator and change line. On a weekly basis, you've got a Gartley buy pattern. And price is trading above resistance, and resistance is the top of its profile. That level's at 1964.50. So on any kind of a pullback, and certainly from a weekly standpoint, you'd want to be watching that area of support. The daily time frame, no top or anything like that out there, just a consolidation. You can see slightly different profile levels up at the top. At the bottom, 1943.20 is consistent. So that's your key level of support. Now, intraday-wise, 30-minute time frame, looks like maybe this is going to go on and form a TD9 count bottom. It needs to spike below the low of the day so far out there. If it can do that, then you could see a TD9 count bottom that forms between 9 a.m. and 10 a.m. this morning. So I'd watch the 30-minute time frame chart. Turns out that the 60-minute time frame chart is going to form bar number 9 in 27 minutes. So that says there should be a TD9 count bottom in gold between 9 and 10 this morning, because that low can come on the bar following bar number 9. So we got kind of synergy, not kind of, we do have synergy with regard to the signals, with regard to the 30 and the 60-minute time frame for Goldilocks. So watch those lows out there. The beauty about that pattern is sometimes it fails. When it fails, oftentimes it does it instantly, tells you about strong momentum move to the downside. Don't know if that's going to take place. If it did take place, the 120-minute time frame chart, which right now has an A to B equals CD to the downside, we're not calculating what that price projection level is. Instead, our focus is on where price broke out on that 120-minute chart. And that would be 1963.10. So that would be another area to watch for support. You've got the A to B equals CD pattern on the 4-hour time frame chart. You've got it on the 5-hour time frame chart. Both of those right now are trading below support levels. So if gold is going to find a bottom, what you want to do is you want to focus on the 30 and the 60-minute time frame charts today. The patterns that are in play out here right now are those TD9 counts. So watch those levels. And then, of course, where could a bounce take us to should those intraday bottoms form? That would be the oscillator and change line levels. Right now, those are around the 1975, 1979 area out there. So that's what's going on with regard to gold. I think it was GPH inside the Tiger's Den that was asking for that. I think it was, and if I was wrong, my apology for that. So those are your gold futures, but let's not stop there. Let's close these out. Let's go take a look at what's going on in high-ho silver out there. You've got silver that is trading back. Now, this is at 835. It's down 835 this morning. It's down 2.25% out here. And for silver, let's actually So in the case of silver, I'm going to switch back to the other chart only because it's visually easy for you to be able to see. And then we'll come back to the different white background charts for silver out there. But give me a moment. Let me get this set up here. I actually want to go to the intraday charts for silver, so I'm going to get those fired up. And then what we're going to do is we're going to take a look at my normal market update chart here and take a look at silver. So this is the important thing with regard to silver. I'm going to get rid of the A to B equals CD pattern for the time being out here. And we can see that in the case of silver, much like gold, it's trading, its real range is between its TD9 count breakout level at 2094 and its TD9 count breakdown resistance level at 2392. We can see how those levels have held. Certainly resistance holding on Thursday and Friday of last week. Now, this is the important thing out here. I believe this is the important thing. And that is there's a new daily profile that's attempting to form for silver. I say attempting to form because I'm using Stevie's advanced Doppler tool that helps us identify. It's an early warning indicator out there. It's a pretty good indicator. This profile here is so wide, it's likely to hold. We won't have confirmation until this evening at 6:01. We'll certainly have it tomorrow during the Trader's Edge show. What this profile shows us is that this is bullish in structure. So it's bullish in structure because the center line, which is at 2238, that's where both buyers and sellers believe there's fair value. It's fair value with inside the range of the profiles. We'll support it at 2215, resistance all the way up at 2399. Since the center line is closer in proximity to the bottom than it is to the top, that's why Stevie refers to it as a bullish structured profile, because there's more buyers lined up between 2215 and 2238 than there are sellers out there. So that's your support range on a move lower. The important thing about this profile, not that that wasn't important what I just shared with you, is that this profile wraps around the prior profile. That is suggesting to you and I to prepare for a consolidation pattern. How long will that consolidation last? This I don't know. But this is telling us, so we know that both gold and silver found resistance, top of profile levels out there. In the case of silver, it wasn't really the top of the profile, it was a CD9 count breakdown level, and that was on Thursday and Friday of last week out there. But now we've got this new profile that's attempting to form. This is telling us to expect a consolidation. So when we go back and we take a look at the gold charts, we talked about consolidation patterns there between profile levels as well. And I think that's the pattern that one should be prepared for if you're trading gold right now, kind of directionless, not so-called directionless, but directionless with regard to whether it's going to break out or break down, and instead it's consolidating with inside those profiles. Let's flip over real quickly here before we go to the hard breakout here. Take a quick peek at silver, and just looking at the intraday charts, much like gold, you can see on the 60-minute time frame chart, you're in bar number 9 right now. That says you could get a TD9 count bottom that forms between 9 and 10 this morning. More work to be done on the 30-minute chart. It's only in bar number 7 right now. But the 2-hour chart is going to form bar number 8. It's going to do that at, let me just tell you when this bar closes, at 10 o'clock this morning out there. So watch silver's 60-minute time frame chart. If price is trading below whatever the low of the day is at 10 a.m., that's telling us that it wants to move even further lower out there. Its next downside support could be at 2312. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we haven't even talked about equity futures for the most part out here. So let's do that. 8:42 in the morning out here. And each of the equity future contracts are attempting to form new profiles. Now, we don't have any kind of a topping pattern. Rhodes momentum indicator, sell the D point, TD9 counts, anything along those lines. No topping patterns exist on the daily time frame chart. The only topping pattern really for the ES Mini out here, let me show you that, is trendline resistance. So I'll just show you the trend line resistance, and we'll go ahead and we'll turn that tool off out there so you can see price trading in trend line resistance. But really what I wanted to share with you is a new profile. This tool is attempting to form. But the important thing here is, so we got a kind of a doji candle on Friday. We've had the last three sessions have been relatively narrow-bodied candles out there. Tells us about a market that's a bit tired. Well, it's had two very strong weeks out there. So on a support level, if you're looking to buy into this, if you believe that the Santa Claus rally has arrived, which it typically does in October, begins in October out there, we certainly have got those bottom patterns, then where you would be buying into the ES Mini. So if you're short, you most certainly want to be paying attention to these levels out there. Right now, it's a bullish structured profile. Again, we don't get confirmation until this evening. But that support range between 44.85 and 45.03. Resistance up at 45.41 out there. So I'm going to turn my trend line back on. Fibonacci retracements out there. We can see we're above the 0.618. That would suggest move to 0.786. But you have to understand where that resistance is. Right now for the ES Mini, that is trend line resistance. In the case of the NQ, there is no trend line resistance. And you're above the 0.786 level out there. I'll leave these retracement levels on. That's from the most previous high to the most previous low out there. New bullish structured profile also attempting to form. And that has support in the range of 15,712 to 15,796, and resistance being up at the 15,965 level. Again, each of the equity future contracts attempting to form new profiles. Here's the Dow equity future contract. It's also a bullish structured profile out there. It is got resistance up at 35,168, and support range is 34,791, 34,917. If it can close above 35,168, 35,349 would be in the cards out there. Again, no tops, but maybe these small-bodied candles telling us that the market is a bit tired here. Maybe getting ready to eat a nice big Thanksgiving meal out there, or some kind of Thanksgiving meal. I hope everybody else is going to do the same. The reason I'm doing the show early is I've got to go pick up Grandma. So it's a big drive. We're going to have a gigantic Thanksgiving here. We've got a bunch of family. I do mean a bunch of family arriving today, so it's going to be nonstop entertainment out there. But tomorrow and Wednesday, I'll be recording the show at the normal time frame out there. We can see in the case of the Russell 2000, we've got trend line resistance as well up above. But price here, in this case here, the profile is forming. This is actually formed already. So that formed on Monday, and this profile is below price, and that's normally a bullish message out there. You've got an A to B equals CD pattern to the upside. The one-to-one price objective gets you to 1866, but price needs to take out that trend line resistance. What's needed there is a close above 1838.50. If we see that trend line resistance fails, and 1866 would be in the cards. If markets were to pull back, though, the support level for the Russell 2000 would be down at 1732. So all that I would do here, Friday was an inside bar. I'd watch Friday's high. If price can move above that, close above that. Friday's high out here was Russell 2000, 1805.60. That would be a small little bullish signal. So all 4 equity future contracts, 3 of them that are attempting to form new profiles. The Russell 2000 has already done that. And so now let's go ahead and move out. So at least you know where support and resistance is. And let's go take a look at the next request that came in. We're going to switch panels. We're going to go to those white background charts. We're going to take a look at the 30-year Treasury. The request was to take a look at the TLT. I'll throw those charts up on the screen. But in order to really understand the TLT, we need to know what's going on in the 30-year Treasury. If we take a look at that monthly time frame chart for the 30-year, if we do get, and right now it's a bullish engulfing candle, at month's end, if we do get a bullish reversal candle, that'll confirm a Rhodes momentum indicator bottom. Now, what that would assure us of is just simply a move up to resistance. That resistance will be that oscillator and change line. Price on a monthly basis has been below its oscillator and change line. We're looking at the continuous contract right now. Only way for me to get up all this data. The price has been below the oscillator and change line since September of 2020. So as you can imagine, that's a key level of resistance. If price were to close above that, that would tell you about a further rally. Now, if you do get that confirmed Rhodes momentum indicator bottom, price should still rally up towards that level. And that's at about 119.5 or so out there. I will come back to that should that unfold. If we take a look at the weekly time frame chart, TD9 count bottom with a consolidation with inside its profiles out there. So that tells you that the weekly chart is really doing the same out there, even if the TLT doesn't show you that message. On the daily time frame, price does have an A to B equals CD pattern to the upside. That A to B equals CD pattern to the upside should take us to 120.63. Turns out at 120 even Steven is the TD9 count breakdown level. There's also a new profile. This is bearish in structure that is attempting to form. The support level or the resistance area, really, the resistance zone on the 30-year Treasury out here. So if you're looking to go long the TLT, recognize that the 30-year on a daily basis got a bearish structured profile. And that resistance zone, which is where it's trading at right now, is between 114.20 and 115.24. If you're looking at the numbers on the right-hand portion of my screen out there, they've got to be converted. But you can write those levels that I just gave you are key. Now, in a bearish structured profile, if price were to close below 114.20, that would signal that sellers should be able to move price back to support. Support would be at that 112.24 level. So that's really what you need to know about the 30-year Treasury. Now let's go take, I'm going to close this panel out, and let's go take a look at the TLT. Do we care about the TLT? Not so much, only from the standpoint that the signals are really coming from the futures contract out there, and that's what we want to keep our eyes on. But still, we're going to go ahead and pull up that TLT chart out there. What's that TLT chart show us? You know, on the daily time frame, looks like it wants to potentially move higher. Its price target should, in fact, price be able to, on the 30-year Treasury, close above 115.24. That would then signal that the TLT should move up towards the 94.21 level out there. So that's what's going on with, take a look at the TLT as well as that 30-year Treasury. Let's go to our next request out here. Next request coming from Danny inside the Tiger's Den. And Danny wants to take a look at Microsoft. So as we take a look at Microsoft, what do we know about it? We know that on Friday, so there's no top. I take that back. On Friday, Microsoft confirmed a sell the D point pattern. So you can see the A to B leg. This was more than a one-to-one expansion to the upside, and we did get a bearish dark cloud cover on Friday. Now, in the pre-market right now, let me just see where Microsoft's last trade just fired off, MSFT. Because the key level of support is 367.33. The last trade fired off at 371.49 out there. So as long as price remains above, so you got to sell the D point pattern. But price above the top of its profile, Danny, and price above that green oscillator and change line. So therefore, its signal is actually neutral. neutral to bearish, but it's neutral. So it tells you that resistance is the high from Thursday. And if price can close above that high, that tells you that you're going to continue to move higher out there. That high from Thursday, 376.35. If price did manage to get below 367.33, the next level of support inside of Microsoft would be down at 364.79. However, I show Microsoft now with a new profile that has formed. It's not showing up on those charts out there, but what I will do is I'll give you those levels. And Microsoft now has support. Let me try to get this on my other screen out here. It's got support in the range of 365.16 to 366.76 out there. So close below 365.16 out there, Danny. That's going to suggest lower price. And that lower price could take you to 353.50. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We're taking a look at ticker symbol ASPN, Aspen Aerogels, and if we take a look at this daily time frame, things are very bullish out here. It does have Rhodes momentum indicator signals that are triggered, but that requires a bearish reversal candle down to confirm a top. You're in bar number 4 today. Everything here on the daily chart suggests that this should continue to move higher. Now, let me see in the pre-market if there's much trading that goes on here. ASPN, it is about 8:54 in the morning. Last trade firing up at 10:79. Not much trading. trading. That was a share size of like 4, so nothing to worry about there. But the daily chart does suggest a higher move. The weekly chart says the same. Now, the weekly chart triggered an A to B equals CD pattern on a Friday. It didn't confirm it, meaning that the B point was not passed with volume out there. Does that matter? No, not necessarily. And the B point was from the week of 10.9 out there, and that high was up at the 9.16. That did a volume there of about 4.3 million shares. Last week was 4 million shares. But nonetheless, the A to B equals CD. It's already above the 1-to-1 level. That would have given you a price projection of 1046. The 1 to 1.272 expansion gets you at 1150. Turns out that the 1145 is a TD9 count breakdown resistance area. So where's Aspen headed to? I'd have to say the 1145, 1150 mark. And if price can close above that, your next area of resistance will be up at 1263. And that's courtesy of that monthly time frame chart. So I hope that helps you out. Thank you both, Danny and Dan out there with regard to Microsoft and Aspen. Let's finish off the show here and go take a look at, really kind of a boring sideways move out here. And it's been in place really since November 14th out here. For these are the 5-hour time frame charts. You'll see a number of TD9 count tops out here, all that have led to sideways type moves out there. I don't know that we're going to get much more than that as we speak. So prepare for a beautiful Thanksgiving meal, I hope, and a holiday out there. But I'll be back with you tomorrow at between 2 and 3. Hopefully I'll be back in time to do a segment with Tom at about 3:15. At least that is the game plan. Thanks for joining me on Magnificent Monday. Have a terrific day, folks, and stay tuned for Tommy O'Brien. He'll be up next. Take care.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all,